Hey everyone, welcome back to another recap podcast from SNXweave, where we give quick weekly recaps of news and important updates from the previous week from the Spartan Council and core contributors, as well as discuss what the Grants Council and ambassadors are up to, so let's get started. First and foremost, let's talk election results. Your Spartan Council members for the upcoming epic will be Afif, Burt Rock, Daniel, Ethernaut, K-Set, Kane, Synthaman, and Terabellus. Serving the community on the Treasury Council this epic will be Artsy Choke, Elliptic Curve, Jordan, and Spartan Glory. Our upcoming Grants Council members will be Alexander, CT, Cyberduck, JVK, and Mike. And lastly, your ambassadors for the coming epic will be Master Mojo, Matt, and Millie. Thank you to all who ran, voted, and participated in governance this epic, and congratulations to our newly elected council members. Now on to our regular news updates. Mark confirmed last week that the team has finally cleared a significant portion of the remaining V2X SIPs. There are now only a few left, and they should be out over the next month or so. These remaining SIPs range from simple community consensus implementations, such as inflation diversion, to more technically involved improvements like volume source and eventually debt migration. Mark is working with Mike and other core contributors to come up with a more formal timeline for what's left of the V2X scope, so we should hopefully hear from them on this front soon. The CCs also discussed their successful offsite in New York, where they mainly focused on the migration from V2 to V3. While the Spartan Council chose to wait until this week to do another V3 update with the new council, Cavalier said everyone left the offsite feeling very optimistic about V3 from the CC side. Last week, the council also discussed SIP 255 to redistribute SUSD fees on L2. It's pretty clear from the name, but this SIP proposes changing the SUSD fee distribution to send additional SUSD to L2, where the amount is proportional to the amount of SNX on L2. In New York, the team noticed that since a lot of fees are being generated on L1, it may create an incentive for users to move back. This SIP will correct that in order to make sure the incentive to move to Optimism remains. During the call, Daniel asked, with the proposal to divert inflationary rewards to futures trading incentives, which only happen on L2, do you see a scenario where fee rewards become lopsided towards L2? DB answered saying that it could happen, but the consensus has always been to incentivize the use of L2. The proposal, however, can be modified to include flexibility for this scenario, and he suggested an amendment with an SCCP configurable parameter. Afif's thoughts on SIP 255 were that it's a half measure and doesn't fully address the current issue. He said he thinks it instead creates a one-way valve for rewards in a system where debt moves freely. Daniel brought up, however, that anything more complicated would probably require complex scope, so a short-term fix would be in the best interest of the protocol. And since the SIP itself is not difficult to implement from an engineering perspective, and the technical complexity is very low, it could be ready for release as early as this week, pending audit. In Grants Council updates, the team had a quick call last week to wrap up the epic where they recapped a few of their ongoing initiatives. They discussed integrations, which they are still trying to help drive by providing grant support where necessary. Mike said during the bear market, the thing that's going to set the protocol apart is our fundamentals. So if Synthetics continues to drive user numbers and volume, that will reflect positively on the protocol. Additionally, CT has been in contact with the developer who built the tool site, and the council is thinking of working on a new UI for SIP and SCCP proposals. Duck will be going through the details of the project to see what it'll take. Lastly, the team was unable to get feedback from the Spartan Council on their margin matching idea, so they will be moving forward with a draft to present. Mike noticed that there seems to be quite a bit of back and forth debate about SIP 254 for perps trading incentives, and it would probably be better not to wait for a resolution on that discussion before moving forward with the margin matching proposal. Duck added that their idea doesn't really have to go through the Spartan Council. It could just be something led by the Grants Council, as long as there's the budget for it. They will be further discussing the next steps for this proposal this week. In Ambassador Council news, the ambassadors hosted another Spartan Space last week, this time with Euler Finance. We got to meet Michael, who's the co-founder of Euler, and first explained to the audience that the protocol is named after a Swiss mathematician, whose name is actually pronounced Euler, so everyone jot that down. They started the protocol in March of 2020 and found investors later that year in September. They were originally interested in the idea after the launch of compound finance a few years prior. Michael explained that they wanted to build Euler to be permissionless, where users could activate their own lending and borrowing markets. The protocol is effectively a rebuilt version of Compound, but with 10 to 15 distinguishing innovations. The asset tiers aspect of Euler is part of what enables their permissionless design. Compound and Aave, by contrast, were built to support a limited number of assets determined by governance. Michael emphasized that this was a really important design decision for them to build a protocol that was robust enough to handle long-tail, possibly malicious assets. He explained that there are 3 asset tiers on Euler. The first is the isolated tier. Every new asset starts here when it's first listed. You can borrow and lend these assets, but you can't use them as collateral, and they can only be borrowed in isolation. The next tier is the cross tier. Assets in the cross tier are available for ordinary borrowing and lending, and cannot be used as collateral to borrow other assets, but they can be borrowed alongside other assets. And the third tier is the collateral tier. Assets in the collateral tier are available for ordinary lending and borrowing, cross-borrowing, and they can be used as collateral as well. Oracles are used to determine asset prices, and ratings are assigned to the feeds for each asset in the interest of transparency. This ensures that users have all of the information they need when making borrowing and lending decisions. Michael also discussed a few factors they consider when determining risk profiles for assets. The first is the borrow factor. The borrow factor is designed to capture the underlying volatility of an asset. You can borrow less against volatile assets, and you can borrow more against less volatile assets. This protects the protocol from the volatility of long-tail assets. The next feature of Euler is Subaccounts, and it's very useful for traders. Each account can be broken into 256 subaccounts, and each subaccount can be managed from one UI dashboard. This ends up being much more gas efficient than creating individual accounts. It also helps to silo risk, because only assets in each account and each subaccount will be subject to liquidation. And speaking of liquidations, Euler's liquidation engine increases capital efficiency for borrowers. Other lending protocols typically set a fixed percentage discount for liquidators to process liquidations. Euler liquidations give a voice to the market as far as what liquidations should be, and Michael described it as more of a Dutch auction style approach rather than an English auction. Liquidation bonuses are the difference between the loan health score and 1, which makes Euler much more attractive for bigger accounts. The ambassadors also asked Michael about Euler governance, and he explained that they've been exploring different models. They ultimately picked the governance contract that they felt provided the best ease of use while being the best audited, and it was launched just a couple of weeks ago. It's not fully on chain yet, but it will be launched in phases as they continue to do additional testing. During the call, the audience also got to hear Michael speak about deferred liquidity, reactive interest rates, and a possible optimism launch. So be sure to check out the recording in case you missed it. And that's it for today's updates. Be sure to check out our weekly recap blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.